Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. It is obvious the market here had moved sideways to lower since early July until mid-August. The problem is that we have two competing patterns vying for the market's attention. First pattern is a July to September triangle, come wedge pattern, pointing lower enough to be considered a wedge but not completely out of the triangle class. This pattern had been breached and on both sides actually, with false breaks, but saw a final break higher in late August. Then there is the second pattern, the late July to early September bear channel, currently 316 to 290 even. Now this one looks better. Thus we have already reached the primary target for the triangle, and we now have a secondary target, harder to reach target, X1 in the 360 area. We also have target X1 in the 360 area. We also have a target X2 for the bull channel in the 346 area. As elsewhere in the grains, the declining short medium moving average here, currently 327 even, has for a little while in early September acted as a resisting trend line, but was broken 2 weeks ago, and in the process formed another pattern, as elsewhere, of an ascending wedge pattern, currently 331 even to 348. It has this week also run up into resistance from a 50% Fibonacci line, in this case the 50% Fibonacci line, the whole of the 2022 move at 348. Now here starts the difficult bit. You see, unlike the other grains markets I've looked at, the long moving average currently is now below the market and acting as support. This is a currently unique situation. What is not unique is that above we now have the medium moving average, currently 350 even, arcing down to reinforce the 50% Fibonacci line at 348, and it is why I suspect we have seen indecision these past 2 days, as the market is unsure on how to proceed with these two nearby overhead resistances. This all being said, the ascending wedge pattern is still currently the dominant pattern, with the possibility that the July to day action may be making some type of V-bottom. So until the wedge pattern is broken, keep a close eye on it and the medium moving average and the 50% Fibonacci combination. London UK feed wheat. The March to June head and shoulders top is still here, as it has been in the other grains, if a little disjointed as a pattern. This was by no means a good head and shoulders pattern, but it still worked. The primary target had been achieved, but the harder to reach secondary target that hasn't been. Some of the more recent action, has been bearish, if not very clear. By that I mean we have had one of two patterns constructed, either a shallowly bearish channel or a narrow but also shallowly descending broadening wedge pattern. That's over the July to early September period, both currently 245.95 to 270.25. Now I've prevaricated on which to choose, siding towards the paired bear channel idea before accepting the descending broadening wedge pattern. Interestingly, what is different here compared to the other grain markets is actually manyfold, and in some respects key, though it does ultimately not detract from the commonality we have seen in the recent patterns. For example, the short medium moving average, currently at 268.70, did act as a proxy for a resistance trend line during August, and was also pierced as we entered September. I had then started to actively act as support. In that time it has not only been the lightly descending broadening wedge pattern, but became actively engaged with the market. Additionally, the long moving average, currently 270.40, is in the wrong place compared to other grain markets, rising up into the wedge pattern instead of being above the activity. And while speaking about the activity, also becoming actively engaged with the market since mid-July, initially as support and then as resistance, and more recently as support, guiding prices higher still. This leads to another point in this market. We've not had any dead crosses here, none, something that has been evident in the other grain markets. So the bearish pressure seen here in July and August has been evident, but in a different format than some of the other grain markets, and without the benefit of the lagging indicator of a dead cross or two. It is therefore, I suppose, no surprise to see the upside tested and then broken last week. However, there was not that much of a free zone above compared to other grain markets, as prices almost immediately started to test other resistances. These were, and I suppose still are, the neckline from the original head and shoulders top, currently at 270.25, the 50% Fibonacci line of the whole of the 2022 move so far at 283.70, and the declining medium moving average, currently also 283.70. Interestingly, the attempt higher is more advanced than elsewhere, as prices have broken above all three of these resistances, including today's unusual combined key reversal up and bullish engulfing pattern, though the market is not as yet fully established above them. That is something that might happen this coming week. We've also seen the establishment of a bull channel, currently 27.15 to 287.40 since mid-August. This seems to be the current pattern that is directing the market and the bullish incentive, though I suspect here as elsewhere we may see potential V-bottom forming since early July. Two final points. The targets for the break higher from the descending broadening wedge pattern are for a primary target at 286.55, a target has already been achieved, and the harder to reach secondary target X1 in the 294.75 area. Finally, with a gapping higher move this week and a strong close, this week is a weekly key reversal up, an interesting thing to finish off with, and something that could lead to all sorts of interesting possibilities in the future. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.